Hello, everyone. Good afternoon. Good morning, the world, wherever you are. This is Tina Cream. Welcome to my YouTube channel. Thank you, my subscribers, for watching me. You're really doing a very good job to me. And whoever is watching or whoever will watch my channel, I am kindly requesting you please to subscribe to my channel. Today there is some important issue that has been bothering me for so long. Actually, I wanted to share with you, my good people, about this bothering issue. And the issue is it bad to take a loan? I want to teach you, or to make you, or to clarify. I want to make everyone understand the risks and benefits of taking a loan. The question is it bad to take a loan? This question is really has a simple yes or no answer. Loans can provide valuable opportunities or they can create financial stress. So wherever we are trying to look for, to apply for a loan, we are supposed to know this. We are supposed to make sure we understand the reasons as to why we are going to acquire a loan. I've said loans can provide valuable opportunities, or these loans can create financial stress. So the outcome depends on your specific situation, the type of loan, and how you manage the borrowed funds. Actually, we've seen people succeeding over acquiring loans, and we've seen people falling apart, their businesses falling apart because of acquiring loans. So, my dear friends, the loans can be valuable, or the loans can create financial stress depending on your specific situation. It depends on the type of the loan you've acquired, and again how you manage the borrowed funds. For a couple of years, I've guided many families through financial decisions. We believe loans are tools like another tool. They can build or they can damage your financial future depending on how they are used. So we are supposed to be very, very careful when applying for the loans, because these very loans can uplift us or they can contribute to our downfall. We have to understand when to borrow and when to wait. All this can make a difference in your financial journey. So before you apply for the loan, or before thinking of a loan, you have to know when are you supposed to borrow, and then when are you supposed to wait. This will make a difference. So before making any borrowing decision, you need the full picture. Before you get up to acquire for a loan, you need a full picture. Let us explore the world of loans together. Please gather here and we explore the world of loans together. We have to understand the different types of loans. So here I'm going to break down the different types of loans. Not all loans work the same way. Each loan type serves a specific purpose and comes with a unique terms. Understanding these differences helps you match the right loan to your specific needs. So there are different types of loans, and as I've said, each loan type is serving or serves a specific purpose, and each loan has its own terms, and therefore before we go for a loan we need to understand all of these. First of all, we have what we call the personal loans. These personal loans are used for debt consolidation and also emergencies. Then we have the mortgages. The mortgages are majorly for home purposes, or they're majorly for home purchase. Then we have what we call the auto loans. Auto loans are for vehicle purchases. Then we have students or student loans. These ones are for education expenses. We have business loans. The business loans are for business setup, expansion, and operations. So those are the most common loans, or the most common types of loans at a glance. Now, loan options vary widely in interest rates, terms or term length, and qualification requirements. So some loans require collateral. What do I mean by collateral? Some loans require security, and then other loans they solely are dependent on the promise to repay. The best choice depends on your specific situation and goals. You, as a person who wants to acquire a loan, you're supposed to sit down and then find out, look onto your goals and your current situation, and then you choose the efficient loan for yourself. Now we are going to compare the most common loan types to understand their typical uses and characteristics. I've already mentioned those loans. Now we want to see the loan type, then its use, the interest rate, and the term length, and also if this kind of loan is secured or it is unsecured. So we have the personal loans. So personal loans, these ones are used for debt consolidation. They're used for large purchases and also emergencies. The interest rate of the personal loans range between 6 to 36%. Then the term length is 1 to 7 years, and these loans are usually unsecured. Then we have the mortgages. These ones I also talked about them. These ones are used to purchase home, or either for home purchase and refinancing. The interest rate ranges from 3 to 8%. This one, the term length of the mortgages is between 15 to 30 years, and these ones are usually secured by property. Then we have what we call the auto loans. Now, the auto loans are used for vehicle purchase. The interest rate ranges from 3 to 10%, and these ones have a term length of 3 to 7 years, and for them they are secured by the vehicle. And we also have the student loans. These ones are meant for education expenses. The interest rate range from 3 to 13%, and the term length is between 10 to 25 years. These loans, the student loans, are usually unsecured. Then we have the business loans. For the business loans, they're meant for business startup, they're meant for business expansion and also for business operations. These ones have an interest rate that ranges between 3 to 30%, and the term length of 1 to 25 years. These ones can either be secured or not secured. So those are the common types of loans I've given you, or I've highlighted their uses and the interest rate range plus the term length, and whether for you to acquire any one of these loans you need to have a security or not. Now, the loan approval process depends on several factors. These factors they are evaluated by the lenders carefully. We need to understand these elements before we prepare a strong application. First of all, we have the credit score. Like most lenders use this as a primary qualification factor. Then we have income and employment history. This one demonstrates the ability to pay. So the money lenders, I mean the people who give the loans, they consider the income and employment history of you, the person who is going to acquire the loan. So your history, your income history and employment history is supposed to show or to demonstrate an ability for you to repay the loan. That is, if you're to qualify for the loan. Then again, the debt to income ratio. This one shows how much of your income goes to existing debts. So the financial lenders, I don't want to call them money lenders, they always depend on the debt to income ratio. They depend on how much your income goes to the existing debts. So for you to qualify for the loan or for a loan, the debt to income ratio is considered by the lenders. Then also the collateral value. Collateral value, we can call it the security value. This one applies for the secured loans. It determines how much you can borrow. So how much is supposed to be given to you, more so on the loans that are supposed to be secured, will depend on the collateral value. So if the security you're giving in is less valuable than the loan, automatically the lenders will not take you as a person to qualify for the loan. Then there is also what we call the loan purpose. Like some lenders restrict how funds can be used. So I've said it depends. The approval process depends on several factors, and I said different lenders evaluate these factors carefully. Now we want to look into, or I want to take you into the details of these loans, and then once really you sit down and think, do you need the loan, or you're supposed to wait? I'm going to go into the depth of the different types of loans, and you there who is watching my channel, you'll sit and find out whether it is necessary for you to go for a particular loan, and if at all you qualify for that loan, and if at all the loan is a risky or valuable. Now, allow me, I'm going to start with the personal loans. These personal loans are good because they offer flexibility for various needs. Remember, we apply for personal loans in terms of emergencies, even when we want consolidation fee, or when we want to consolidate the debts we've been having. Now, these loans typically range from, now this I've calculated and then put the figures in US dollars. Now you, wherever you are, you can change the from US dollars to the currencies in your own country or region. Now, the personal loans range from 1,000 US dollars to 50,000 US dollars, and these personal loans do not require security or what we call collateral. Now, approval decisions of personal loans often happen within days or even hours. So this is how good the personal loans are. Approval doesn't take too much time, because remember, you go for personal loans because because of the emergencies. So the approval decisions just happen within days or even in hours. Now here, the interest rates for personal loans vary significantly. So these ones are based on your credit profile. Those with excellent credit might secure rates under 10%, while others might face rates exceeding 30%. Now, your rate directly affects the total cost over the time. So many people use personal loans for debt consolidation, as I said, and this strategy can simply multiple payments into one and potentially secure a lower overall interest rate. However, so we are supposed to note this, however, it only works if you address the spending habits that created the debt initially. So now, if at all you cannot address the spending habits that made you go for a personal loan to consolidate a debt, again and again you will be running for debts. But then when you want to work it better for you, you're supposed to initially look and see what made you spend the other time, what made you overspend, such that what made you overspend and then made you fall into a big debt. Now, if you're looking for flexible borrowing options, then there is a line of credit that can be worth exploring. Now, those are the personal loans. They are for emergency, for debt consolidation, and therefore, my dear, if you're to go for a personal loan, you have to sit down and address your spending habits that created the debt. So you revise accordingly. Be like, here, maybe I was so extravagant here, I didn't do well here, I overspent, this wasn't necessary to be spent on. So you revise, you address the spending habits and revise them such that you get out of the debt on getting or on acquiring another loan, or on acquiring the personal loan. Now, slowly by slowly, I want to take you through all the kinds of loans, how important they are. Now, for now, I'm going to stop at the personal loans. Please watch out for my next presentation or the show by subscribing to my channel and understand what happens, how useful are these loans, and when to take a loan, when to wait for a loan. Please subscribe to my channel for more information about the loans.